Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. There's one auto company that I think could 10x for investors over the next 10 years. And it's not Tesla, it's not Rivian, it's not Lucid, it's not the big names that you might be hearing a lot about right now. It's a company that you know really well, and that's General Motors. General Motors is better positioned for the future of autonomous driving than you might think. And I want to cover why this is a potential 10x stock in this video. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube. And for a deep dive into General Motors and its autonomous driving division, Cruise, I'm going to put a link to the show notes to Asymmetric Investing, where I'm covering 10x stocks. So if you're interested in companies that have 10x potential over the next decade, I think you'd really enjoy that newsletter. So check that out in the show notes. But I want to start with GM and what you're getting with just the core business first. GM stock trades for 5.6 times earnings, 5.6. For a comparison, Tesla stock trades for 51 times earnings. So about a tenth of the price from an price to earnings ratio as Tesla right now. The market cap of the company is also $48 billion compared to a company like Tesla, which has a market cap of $580 billion. So here for General Motors to 10x, they would still be less valuable than Tesla. Now, I think the core business kind of is what it is. They make a lot of trucks and SUVs. That's where they make a vast majority of their money. About 90% of vehicles that GM sells is in North America is trucks and SUVs. So they're not really competing with the smaller vehicles that Tesla's making and a lot of the vehicles that are going electric right now. I know that trucks are starting to go electric. We're starting to see some SUVs. The Rivian's kind of like a small SUV. But most of the money that GM is making is in vehicles that don't make sense as electric vehicles quite yet. We're getting there, but they're also making investments in moving a lot of their vehicles to electric over the next decade. So they're moved a little bit more slowly than some of their competitors. But financially, it's been a really good move because General Motors is extremely profitable right now. And they're using a huge chunk of those profits to invest in Cruise. And that's the autonomous driving company. If you're not familiar with Cruise, this is a company that makes autonomous driving technology and is basically building an Uber competitor. But instead of being random drivers who are driving their own cars around and picking people up and dropping them off where they want to go, it's an autonomous vehicle that's driving around. There's no driver involved at all. And for now, this is a retrofitted Chevy Bolt vehicle that they're operating. They have 388 of them in the California area. But over time, we're going to move to something called the Cruise Origin, which is in its final testing right now, should launch in 2023. The Cruise Origin is a custom-built vehicle that is built specifically for ride sharing and for delivery services. So it can fit 4 people in it at least. You're able to control the music, the temperature in the vehicle. And like I said, there's no driver. So as far as taking a ride around, it's going to be safer, more comfortable for a lot of people. And I think could really disrupt what is now a huge business in Uber. I want to go through the calculation that I did in my write-up about the possibility of GM and Cruise being a 10x investment, because I think this isn't as crazy as you might think on the surface. We know that Uber went from startup, launching its service publicly in 2011, to being in about 10,000 cities a decade later. So that's the rate of growth that Uber did over time. We also know that Uber did 7.6 billion trips in 2022 and generated $32 billion in revenue from those trips. And Uber doesn't generate 100% of the revenue that you pay. Some of the money goes to the driver. So even that $32 billion number might kind of underestimate the potential for Cruise, which is actually going to get 100% of the revenue that people pay for their trips. So let's just do a little bit of math here. If Cruise could get to 1,000 cities a decade from now, with 1,000 vehicles per city, not out of the realm of possibility. Like I said, there are 388 vehicles operating in the San Francisco area. And if those vehicles could do 30 rides per day at $18, again, a little over 1 ride per hour, $18 compares to an average ride on Uber is about $25, so a significantly lower price. That business would be nearly $200 billion in revenue. $200 billion. That is an absolutely massive business. And I think this could be a very high margin business because, like I said, they're making the Cruise Origin, which is going to be a custom built vehicle built to be low cost. It's supposed to built to run about 1 million miles. And they're going to make these be exactly the same. So they're not going to have the same customization costs as you have with a lot of vehicles We don't know exactly what the costs are right now, but the cost per mile should be significantly lower than what Uber has to pay somebody that's actually physically driving their own car. So potentially a lot lower cost structure. If you assume that there's a 30% operating margin, that's a $60 billion operating profit business. That alone could be enough to 10x General Motors stock. Now, you might think those numbers are crazy, but I don't think they're out of the realm of possibility, especially when you see how quickly Uber was able to scale its business and become a verb. What if a decade from now, cruise is a verb and you just see them driving around cities all over the world? That might be closer than you think. Cruise launched in 2 cities, Phoenix and Austin, Texas, at the end of 2022, and they have been expanding their service in the San Francisco area. I think this is a business that could expand relatively quickly. Maybe it's not 1,000 cities, but maybe it's 500 cities. Again, 1,000 cities seems like a lot, but that's only a tenth of where Uber is operating. So there's a lot of upside here. Now, to be clear, there's a lot of risk if you're just investing in a business like Cruise. But the nice thing with this investment is that you have General Motors to fall back on, a very profitable automaker. That's really the downside, is that you're getting a value stock. And the upside is you're getting the upside potential from Cruise, because General Motors owns about 80% of Cruise today. It's also offered about $5 billion in financing for Cruise to be able to expand its commercial operations around the world. So as you see this service start to be available in more and more places, start to think about what kind of an impact that's going to have on General Motors operations, because I think this is going to be an absolute growth machine over the next decade. So don't underestimate Cruise and its potential impact on General Motors as an investment. I'm not really particularly fond of General Motors, the core automaker, but Cruise is a company that I love its potential. I love its asymmetric opportunity. This could be the next Uber in transportation, but taking the driver out of the equation, going to full autonomy, and we're already there. The vehicles are already operating. They're already on streets today. It's not a hypothetical like you get with Tesla. They're actually out there and you can take a ride in them right now. So that's a big step forward. And that's why I like General Motors as a potential 10x stock over the next decade. But what do you think? I'd love to hear your comments in the comment section below. Subscribe to Rive Investing here on YouTube. Don't forget to do that for all of my content. Thanks for watching, everybody. I'll see you here next time.